Hello, everybody. Welcome. Again, sorry for the last minute time change. I think we'll be able to, given my schedule, I'll be able to stick with this time going forward. The only problem with sticking with this time is that in Arizona, where daylight savings doesn't ever occur, so it doesn't, our time never changes. So it's 5 o'clock where I am right now, and next week the rest of the world will change, and so what will be 6 o'clock to everybody that's in Idaho and Utah will then be 5 o'clock, and we'll be on the same time. So I don't know how many people that's going to screw up with work schedules, because 6 o'clock is often doable when you have work, but 5 o'clock is often early. You're just barely off work. So anyway, so I put that in the announcement, but so this meeting will move to 5 p.m. Starting next week because daylight savings time is going to change on Sunday. I recognize I'm not changing, but the clocks are. And I can't move it later. I thought it would be later, but I teach a class for Arizona State University that starts at 6 p.m. my time. So that's all I can do. Dustin said he's getting some feedback on sound. Let me see. Switch. That might be better. Is that better, Dustin?
Yeah, okay, good. I think I had my little earpiece microphone in, and it was still picking up from the camera, and so there was the feedback. Anyway, so again, I apologize. I'm doing my best to find a time that works for everybody, and I know it's obvious, but in previous incarnations of this class, the midweek work was due on Thursday, so having this class on Thursday was really helpful because people who were working on the homework that night could ask questions of the stuff they were working on. But now with it being due on Wednesday, and Wednesday not being an option for me, Tuesday, I guess, is the best night because it allows people to maybe get some help before something's due. So there we go. We'll just do the best we can. Anyway, so welcome everyone. I guess we should get started with a prayer. And I apologize, I just noticed on my camera, there's some artwork on the wall behind me. My granddaughters visited my office yesterday and left me a present. At least it's on the whiteboard. So that's good. Anyway, would anyone be willing to volunteer to give us an opening prayer?
I'll say it.
Great, thank you.
No problem. Our dear Father in heaven, we're grateful that we are able to meet together over Zoom tonight for our class, and we pray for thy spirit to be with us, that we will be able to understand the concepts that are being taught, and please help us to be able to also prepare for our exam this week and be able to retain the information that we have studied. We're grateful for thy help in this class and in our lives, and we say these things in the name of thy Son, Jesus Christ, amen.
Amen. Thank you. Thanks very much, Sarah. So a couple of like maybe general announcements. The first, let me just show you. So the first has to do with, I'm still finding out some people aren't aware of this little document I put together, and it's growing as we go because this is my first year using, or first semester using this material. But right in the modules, I have a little thing called Brother Fox's additional study materials. In addition to this little link, which if you can't remember when you're supposed to be a presenter, that link will tell you. But there's this other one called additional study content. And you can see I'm slowly growing it. So down here we have, for each chapter, there's a little chapter overview, which is honestly taken from this meeting. When I do that little lecture type portion, I just cut that out and make that be a chapter overview. But instead of having to watch the whole hour-long meeting, you can just go see that. Like last chapter was about 28 minutes. Also, as I work out some of these quiz access problems, I just add them here as videos. There's the exam review, which is actually the same exam review we had for chapter 1. It has sections for each exam. So that's not something different, But some people were saying like, are you going to do another review like you did for exam 1? And I was like, well, it's the same document. So I just put another link to it here. So that stuff's all there for you. And I've had some good feedback. I've even shared it to the Inscribe page, and my nephew, who I did not know was taking accounting, said, hey, people in my class are using it. He's in the face-to-face class there at BYU. So I just trying to, I mean, if we're going to take the time to create this stuff, I'd like it to get out there for anybody who needs it or wants it. And if you don't need it or want it, no worries, that's fine. The second thing I want to let you know is, so I got back my reports from Proctorio for the first exam. Everybody's always worried that Proctorio is gonna, pick out some behavior that they're doing and accuse them of cheating or something. The sort of like the AI invasion, before they destroy us, like in Terminator, they're just gonna accuse us of cheating and get us in trouble or something. Like that's their first dastardly plan, is to get us all out of college, and then they're going to kill us all. I don't know how the AIs are going to work, but to let you know, the AI from Proctorio did not accuse anyone of cheating. So whatever you had going on in your life, a kid running into the room, you were afraid you looked away too long, your spouse came through and, whatever it is, that was not enough to trigger Proctorio to saying any of you cheated. So just be aware of that. I'm trying to give you some like reassurance that Proctorio, while it may not be an angel, neither is it a devil. It is just a computer system that picks up potential things and flags them. And if it flags them, it goes to a human reviewer who then reviews it. And if the human reviewer thinks it looks like a possible cheating scenario, then they send a link to the instructor to review it. So that's the process. And so what I'm saying is relax, or as my daughter would say, chill. But that never actually makes me want to chill. It makes me like want to fight. I'm not sure. I guess it's a contextual thing.
So Brother Fox, I don't know if anybody else had a problem with Proctorio, but it kicked me out like 3 times while I was taking the exam. Now it did let me, I just did a live chat and it let me right back in, but it did kick me out, and I didn't lose internet or anything. I don't know what happened, but it kicked me out several times.
Yeah, no, and Proctorio has, what's strange about Proctorio is like 80% of the people using it are like no problems. It runs in the background, people take their tests, it's great. But 20%, which is a pretty huge number if you think about it, and I'm making these numbers up, but a large minority has some kind of weird problem where it drops them out, and then you have to get on the chat with support, and it's really frustrating when you're trying to focus your energies on doing well on the exam. So it's hard I don't know a fix that's going to keep that from happening to you again. But all I can do is say, I hope it doesn't happen to you again, because what's hard about Proctorio too is people will text me and I'm like, I have no way of fixing it. It's completely outside of me. The best thing you can do if you have problems with Proctorio is click the little, where is it at? The little Proctorio shield up here. You can go to it and or you can somewhere, I guess you click on Proctorio, and then you can go chat with people, and they're super helpful. But that doesn't feel super helpful when you're trying to get work done and there's a problem, especially when you see they're rated 1 star, because everybody hates them. Must be sad to be there, to like work at Proctorio, and like the phone rings and you're like, it's never going to be someone like, man, I love you guys. Anyway, I'm not trying to make light of it at all. I know it's frustrating. I will say that some people on this last go around kind of got in the back door and started that quiz and then closed the quiz and then took the exam, and Proctorio may or may not have watched them, and they think they have that fixed, so that this time everybody will have to go through Proctorio, which probably doesn't. I mean, that's just, so they're working on that. I have, and many other instructors have, sort of expressed our frustration with unfinished nature of the course, where it feels like they're making adjustments on the fly. And the course council, each course is run by a council, interestingly, at a church college, made up of an online teacher, a face-to-face teacher, and then a course designer. They've come back and said, look, we know, and it stinks, but typically when they create a new course, what they do is they have like 1 or 2 teachers do what they call a pilot, and then they fix all these problems in the pilot. But our contract with McGraw-Hill would not allow us to do that, so we had to just sort of jump into using it. I will also say that the exam scores in my 2 sections, and reported by other instructors, are something like 8 to 10 points higher on average than they were in previous incarnations of the course using Wiley Plus. So either we just have a really smart group of people right now, which after meeting you, I'm guessing that's what it is, or it's a little bit better. So that's good news. So if you feel like you did poorly on the exam, recognize you did on average 10 points better than what they were doing before. Anyway, all right, so that's a lot of me talking because, well, that's what I do. So any general questions, in other words, not like problem specific questions, but questions about course stuff? Okay, so let me then jump to a little presentation I put together. Let's see, not that one. My wife mocks the number of things I have open on my windows, and I tell her that fools mock, that they shall mourn, but she doesn't seem scared of that. So probably because I'm just not an intimidating person or something. Anyway, so recognize that when I kind of do these little run-throughs of some of the chapter material, I'm not covering all the chapter material. So like, for example, this chapter, they spend a lot of the, if you've read through the textbook, a lot of the first pages of the chapter talking about all these principles of internal control. And those principles of internal control are important, but I don't really think they need a lot of review. Like they're just sort of like, you know how there's like knowledge information that you just have to like read about, and then there's like, you know, how do I do something information? And so a lot of the stuff that I consider just knowledge stuff that you're going to pull out of the book, you know, name the 6 principles of internal or whatever, like, I figure you have that, you know, and of course, if people have questions, you can still ask me, but I don't spend a lot of time covering it. And so I try to focus on the sort of stuff that we're going to have to figure out how we go about actually creating the journal entries and so forth. I feel like our time's usually better spent in that way. So just don't think you can just watch this, you know, this little video and then be like, oh, I got the whole section covered. You still have to read through the textbook. And I said read through because I don't think anybody wants to read a textbook like it's a novel, unless you just are really into it. Like, I don't know, people taking the textbook into the bathroom and just really, you know, reading about petty cash until your legs fall asleep. Maybe, I don't know. But not me. All right, so there's a couple things here. The first thing we have is what's called a petty cash fund. And so this is pretty normal. A lot of businesses, the idea is that sometimes you just need a little bit of cash around for like basic things, like grabbing some office supplies that you don't have in the office supply storage, or, you know, everybody decides we're going to have a pizza party and the boss says, yeah, we can do it. And so instead of having to like go down to like the finance department and have them cut a check, you can just grab some money out of the petty cash fund and pay for those things. So from the business's perspective, the petty cash fund is an asset. And we establish it simply by, I mean, like physically, you usually have like a little metal box. I think I have one in my drawer over here. I could show you. So I do the funds for like our local soccer club. And, you know, I always keep a couple $100 in there. So if I need stamps or something, I can just go grab them. Anyway, so when we created that, I physically went and got $200 from the bank and put it in the box, and then did a journal entry in our books to debit petty cash. So increase that asset, petty cash, and credit cash. So decrease the money from our checking account. That's how I established the petty cash fund. Then what happens is throughout the month, anytime someone pulls money out of the petty cash fund, a lot of companies actually have like a little form. I've seen ones that are as simple as like a scrap of paper, like you write on it, who took the money out, what it was for and how much, okay? But a lot of places have a form to make sure they have the info they need. And so this on the screen right now, oh, I'm not sharing my screen. You're probably wondering what I'm talking about. Or am I? Yeah, I am. All right, sorry. All right, so this is just a list of all like the cash payments during a period. So this looks like the month of November. They took out 1505, transport of merchandise purchased. That's a fancy way of saying we like paid for FedEx or something. Purchased of office supplies that were immediately used, customers package delivered, tile cleaning. So at the end of the month, they go, hey, we spent $71.30 out of the petty cash fund, okay? And so at that point, what you do is you reimburse the petty cash fund. So this is where it's a little bit weird. So the petty cash fund is like a special type of asset account that we call an impressed fund. Not impressed like it really, it's really excited about those shiny white teeth you have. It's not impressed with you. It's impressed meaning we enter a debit entry to establish the fund, and then we never actually record anything coming out of the fund. So whenever we actually go at the end of the month to replenish the money in the petty cash fund, all we're going to do is debit each of the accounts necessary for those items that we spent money on, and then we're going to credit cash. So in essence, we're pulling cash out of our cash account, $71.30, putting it back into the metal box, and then recording all of the expenses. And this one of them was for merchandise inventory too. All of the expenses and other costs straight in the journal entry. So just, I guess the only takeaway you need to know is whenever you're replenishing your petty cash fund, you don't worry about, because in theory, what you could do is you could do a debit to each of these accounts: merchandise inventory, office supplies, delivery expense, miscellaneous expense, and then a credit to petty cash, and then do another entry which would debit petty cash and credit cash, but we're just skipping that step and we're not ever going to even enter anything. So think about this. When we established the fund, our petty cash account had $75 in it. We spent a bunch of money out of our petty cash fund, but on our books, it still shows $75 in that petty cash fund because we never did a journal entry as we spent. Then at the end of the month, when we reimburse the petty cash fund, we're just going to go ahead and record those expenses and take that money out of cash. So on the books, our petty cash fund still shows a $75 balance. So that's the thing that's a little weird about this. So I'm going to move on to, well, one more concept with petty cash. So if we decide, hey, in this case, having $75 in our petty cash fund isn't enough, then we can just do an entry to increase the petty cash fund. We would debit petty cash $25 and credit cash. And conversely, if we decide, hey, we don't need $75 in that petty cash fund, or it's too much risk having that much in there, we can do a journal entry that does the opposite. We can debit cash, so pull money out of petty cash and put it back into our checking account or our cash fund. Sometimes the petty cash fund, I know you don't believe this, but it will come out off a little bit. So the end of the month, we'll tally up all of the little papers or receipts people have put in there for cash they've spent, and we'll find out we're short, meaning probably somebody paid for something with it and accidentally stuck the change in their pocket. Like, it just happens, right? There's a reason we try not to use cash as much as possible, because even good people make honest mistakes. And so if our petty cash fund comes out over or short, then at the end of the month, when we're doing our reimbursement entry, you can see here we're debiting expense and crediting cash. If there's a difference between the expenses and the cash, then we're going to debit an account called cash over and short. So just so if our expenses don't add up to the amount of cash that's missing, then we're going to debit cash over and short. And if it's the other way around, if we have more expenses than the amount of cash that's missing, then we're going to credit the cash over and short account. I remember this just because expenses are debited. So if we're having to pay out extra money, so to speak, then that's going to be a debit. It's going to be a kind of expense. And revenues are credited. So if it's the opposite, if we have more expenses, in other words, if we have extra cash, then we're going to credit that account. So that's the process. I think when you work out a couple of them, maybe you already have, you'll find that they're pretty easy overall. All right, so I'm moving on to a new topic. Any questions about petty cash funds? All right, so either I'm an incredible explainer of things, or you haven't really looked at it yet, so you're like, I don't know how to formulate a question about it yet, or you just honestly don't care about petty cash funds, which that there's a good chance that's, I won't say don't care. I would say of all the things you have to be concerned about in life, maybe petty cash funds is low on the list. How about that? So the other thing that's new this chapter is bank statement reconciliation.
I have a quick question, sorry.
Oh, I'm sorry, I already moved on. No.
The cash over, cash short, that's only used for petty cash journaling?
Uh-huh.
Okay.
Yeah.
That was my clarification.
Yeah, and only if you're over or short. So if you have the exact amount, then no worries. You don't have to worry about over or short.
Okay. I was just wondering, like with bank statement stuff, when, you know, they are a little bit over or a little bit short, we never use that though. It's only the petty
No,
cash.
most businesses that I work with, I tell them to create an account that we call Ask My Accountant. And so whenever they're not sure, they put that entry like into Ask My Accountant, and then we try to fix it when, you know, because they're usually operating all the time and they don't want to pay me tons of money. But you know, if I you know, maybe, you know, once a period or something, they'll come spend a couple hours or an hour, and most of it's easy stuff to fix. But so just, I guess what I'm saying is many businesses have some form of something like this where they're saying we're off a little and we're not sure why. So we're gonna kind of put a pin in that and ask somebody about it when we're looking at it. But usually that cash over, cash short is just for petty cash. All right. Okay. So the other thing is what's called a bank reconciliation. Most modern software systems we're using now reconcile kind of on the fly, meaning we don't go through this official process as much. Although I think there's still value in it, and there's certainly value in understanding the process of it and understanding how money flows through cash accounts. So it's interesting, you know, depending on the age of my students. So here, like at Eastern Arizona College, where I teach full time, I have almost all what you'd call traditional students, you know, ages 18 to 24. And many of them have like seriously never seen a bank statement. They just don't. I mean, they have checking accounts, but their phone sends them a text each time there's a withdrawal, and they just kind of keep, you know, and it tells them their balance, and they don't worry about this. So I'm going to go through this a little bit, like it'll be obvious to some of you who've looked at bank statements, and to others it might seem, so it might seem like new material. So here's a bank statement. It has the date on it. It has the balance from the last statement, and then it has any money that's left the account, which it often calls debits, and any money that's come into the account, which it calls credits. And then it has a current balance. That's the balance as of the date on the statement. And then it will have detail of all the checks and debits and detail of all the deposits and credits. Okay, I mean, and some have different things, but these are generally the things that a bank statement has. One point of clarification, some people say, wait a minute, if this is a deposit into my account, why is it a credit? Because cash increases with a debit. And I would say you're right, cash does increase with a debit and decrease with a credit, but the bank, they don't care about your perspective, they're thinking from their perspective. And remember that anytime you give money to the bank, so if you go deposit money in your account, you're actually loaning that money to them, right? They're on the hook, they have to produce that money when you want that money back. So to a bank, whenever you deposit money in your account, that's a credit to them. That's an increase to a current liability. So that's why deposits in your bank account are called credits, because from the bank statement, they're crediting a liability account. Maybe that'll come up like in a Trivial Pursuit game or something. You can show how smart you are. Really, I think getting a college education, right, is like 20% getting the credential you need for a job and like 80% stuff you could whip out in trivia games. Like that was pretty cynical. I didn't mean that. Like I value the fact that I was able to go to school. It's given me a lot. But it was a joke, people. All right. Anyway, so the purpose of bank reconciliation is to make sure our records, our books is the term that they'll use, match up with the bank's records. The problem with that is like the numbers are never going to match. So we have to reconcile them. The reason they don't match is because sometimes we will deposit money in the bank right near the end of the month. And so even though we've recorded that deposit on our books, it's not yet showing up on the bank statement when we get it. Sometimes we'll have outstanding checks. I don't know if you ever had this happen. You write a check and you give to somebody. Also, many of my students have never written a check ever in their life because they just use debit cards for everything. But you write a check, you give it to someone and they like stick it in their wallet. And then like a month later, it still hasn't cleared your account. And you're like, dude, like, I hate when like one catches me by surprise. Would you go ahead and like deposit that check? And even if someone deposits the check right away, there's usually a natural lag time. It takes a day or two for the bank, you know, because what happens is when they deposit the check in their account, then their bank reaches out to your bank and says, hey, I want to draw this money. And then their bank will electronically transfer those funds. And there's a lag. So you, again, as soon as you write the check, you usually record it in your books, but it may not show up in your bank account for a few days. And if a bank statement is printed in the interim, it's not going to have that check on it that you wrote and recorded in your book. Sometimes there are bank errors. You get your bank statement back and you look at it and you're like, whoa, this says I wrote the check for, you know, a certain amount, but that's not what I have on my records. And so you have to get that fixed. So the cash balance on the bank statement, plus any deposits in transit, those are deposits you've made but that aren't yet showing on the bank account, minus any outstanding checks, those are checks you've written but aren't yet showing up on the bank statement, plus or minus any bank errors is going to give us an adjusted cash balance per the bank. Sometimes I call it a adjusted bank balance. Then we have to look at our books and realize there's probably information that's not in our books yet until we get our bank statement. For example, sometimes in my case, I sold one of my businesses last year. And so rather than me having to deal with handling payments from the customer, I pay a transfer agent. The person I sold it to makes payments right to that transfer agent. They handle all the interest and all that stuff. And then it just gets direct deposited in my account. And so that's a collection that's not in my book. I don't know for sure I'm getting it until I get my bank statement. I'm like, oh, there it is. Yep, the money came in. So I'm going to have to make adjustments because there'll be things that aren't in my books yet that will show up on the bank statement. Also, any interest the bank pays me, you know, that whopping 1/100th of 1% they're paying right now or whatever it is. Bank fees, right? Sometimes you have to pay some sort of fee for your banking. That's a deduction that probably will be on the bank statement, but not recorded in your books. NSF checks, that means non-sufficient funds. Sometimes people call them bounced checks. These would be like if a customer wrote me a check and I recorded that check in my books as an increase to my cash, then my bank statement comes and I realize that customer didn't have any money in their account. And so I have to subtract that money back out. And then any book errors. So errors I've made in recording things, right? Sometimes you get that bank statement and you say, this isn't right. And then you check your book versus the bank statement and you go, oh, wait, that was my error. I recorded it wrong. So our cash balance plus any collections of interest or collections and interest minus any bank fees and NSF checks plus or minus book errors are going to give us an adjusted cash balance according to our book. And so after we make all these adjustments, then our adjusted balances should match. And this process is called reconciliation, or a lot of times they just call it bank reconciliation. So here's an example for the Video Buster company. I guess that's a play on Blockbuster or something, but I think Redbox followed by Amazon Prime and Netflix killed good old Video Buster. Anyway, so again, the process, you look on your bank statement and you see what's the bank statement's balance. Then you're going to add any deposits in transit. And the way you do that is you look at your bank statement and you look at your books. And if there's any deposits that are on your books, but not yet on the bank statement, those are deposits in transit. So you're going to add those. Then you're going to look for outstanding checks. Again, the way you do that is you look at your bank statement and you look at your books and any checks that are in your books already that you've written, but are not yet on the bank statement, you're going to deduct those as outstanding checks. And so that will give you your adjusted balance. Bank statement plus deposits in transit minus any outstanding checks. And also you would look to see if there's any errors. Errors are pretty rare. So in this case, there were no errors. So they have an adjusted balance of 1845. Then the next step is to look at your book balance. Again, that's what it says in your cash account, you know, for your in your books. And then you're going to add any collected notes that showed up on the bank statement, any interest you earned, subtract out any service fees. Looks like we had a check printing charge, and subtract out this NSF check. And that's going to give you the adjust. And then if there's any errors, you would adjust for those too. And then you can see once we've got the balances to match, that means we're reconciled. And so really, this is just the process we go through every period, every month usually, to make sure that our books match our bank statement. And we have to do this adjustment process to make sure it happens. And even though, like I said, computers do this for us on an ongoing basis, it's still a good process. So what most modern systems do now is I enter a transaction for this nonprofit soccer club I do. I'll enter my transactions, and then it's tied to my bank account, right? You may use something like this, QuickBooks or Quicken. And it will go out and it will look at my bank account, and each time something hits my bank account, it will sort of come back and say, hey, it looks like a deduction came out of your checking account, and it looks like it matches this transaction you already entered. Do you want to, you know, merge the two in essence? And you say yes, and then that's how it reconciles, is by just doing each transaction by transaction. All right. One last thing is because any adjustments I made to the book, in other words, items that were not in my book and I didn't really find out about until I got my bank statement, I have to go ahead and enter those adjustments into the book. So I have to do journal entries to do that. So if we look up again, we can see we had this collected note that we adjusted our book balance for. We had interest earned. We had a check printing charge, and then we had an NSF check. So we're going to do journal entries for the collection of the note. We'll show our cash go up and our note receivable going down. For interest earned, we'll show our cash going up and our interest revenue going up. For check printing, we'll debit miscellaneous expense and credit cash. And then for the NSF check, we're actually going to debit accounts receivable because this customer now owes us this money since the check bounced, and we'll credit cash, show our cash going down. And that's really it as far as new stuff for this chapter, other than, like I said, all of that informational stuff on things like cash handling and internal controls. So that kind of does it for my little presentation, I guess. I guess questions at this point, either about this material or something on the homework you wanted to have me take a look at. Or about, I don't know, you can ask me about the meaning of life, but I don't know how great of an answer I'll give. Go ahead, Sarah, sorry.
There's a question in the chat. I think she had to get off, but she posted it in there.
Okay.
I'm probably gonna go back and watch it later.
Okay, let's see. I have another meeting at 8:30 if you get a chance and others need help with the computing percent change between beginning and ending cash equivalent, and how to compute cash equivalents as a percent total of assets, total current liabilities. I could not find out how to do it in the book. Thanks for having a meeting. Okay, is that a specific problem or is it?
So it's the Excel assignment for the week. I had the same problem.
Okay, let's pull it up and take a look at it. Let's see, give me a moment. Those evil Excel problems. Nobody likes them. They're kind of like Proctorio. Let's see. So chapter 6. We're looking at why am I not seeing it?
It's down at the bottom. It's due on the 7th.
I see financial statement analysis, that one?
Yeah, that's it.
Okay, cool. Okay, let me share my screen again. All right. So I'm in, like, unfortunately mine shows it in like instructor mode. So it shows the answers in there. So it's not like I'm working it out for you. And unfortunately also, as most of these are they use an algorithm. So your numbers will be the same as mine, or that'd be kind of awesome if it is. You just get the answers. Okay, so we have use Apple's financial statements in Appendix A to answer the following, and then we have all of these different things. So the first one is determine the amount of cash and cash equivalents. Let's see if we can. Okay, that's not being easy. So let's see, Apple. All right. So let's see, on this one, it's nice because it actually tells us just like straight up, right? Cash and cash equivalents. So that was nice of them, I guess. And so, you know, on this one, we would just pull that up. It doesn't always do that. Sometimes it'll list a bunch of current assets and you have to decide like, hey, are those cash equivalents or are those not cash equivalents? Typically our rules for things that are cash equivalents are things that like obviously are actual cash, or things that are like a checking account, a savings account, or even like a money market account, anything that has cash that can be pulled out nearly immediately. Okay, you know, usually within, I'd have to look, each book sometimes gives a slightly different definition. Some say within 30 days, and some use even shorter. That and for a set amount. So like if you had stock in another company, that wouldn't be a cash equivalent, because even though you could get your cash within a 3-day settlement period, it's not a set amount. You're really determined, it's really impacted by the market value of that stock. So for this specific problem, it gives us cash and cash equivalents, so that's not too bad. If we go to requirement 2, it says compute cash and cash equivalents as a % of total current assets, total current liabilities, and shareholders' equity. So again, let's see. Sometimes it's hard for me to see what, so this information, there's our cash and cash equivalents, our current assets right there off of their financial statement, our current liabilities right there off of the financial statement. So to compute these as a percentage, all we're going to do is divide. So to figure out my cash and cash equivalents as a percentage of current assets, I would just take the cash and cash equivalent 25,913 divided by the current assets 131,339, and that would give me 0.197 or 19.7%. So for each of these, all we have to do is divide the cash and cash equivalents by the given number in each section. Again, if you have a question or I'm going too fast, jump in and tell me, because otherwise I'm just sort of walking through it. All right, 3 says compute the percent change. So this I think was the one that Myrona was asking about. Compute the percent change between the beginning and ending year amounts of cash and cash equivalents. So how do you go about computing that is the question. So let's see. So on our statement of cash flows, let's scroll down to, I think that's what it's telling us to do. Or maybe we don't need to do that. So I'm just going to go back up so we can see our cash and cash equivalents. So to compute the difference between the two, the first thing I have to do, let me get my calculator. The percent change, I should say. Oh, it does say per the statement of cash flows.
Yeah, I think it lists it on there down below. It'll say the end of the year, and so you should. I just divided the two of them and then subtracted one to get the difference. Right.
I just didn't want to have to go digging for the statement of cash flows, but there it is. Let's see. That's shareholders' equity. There's the statement of cash flows. So cash and cash equivalents end of year. So we can see. So to find the percent change from 2017 to 2018, all I'm going to do is, so my numbers are right here. Is I'm going to subtract them. I'm going to say 25,913 minus 20,289, which will give me the difference between the two. And then I'll divide that by the previous year's number. Okay, so the older year's number. So in this case, I'm going to divide that by 20,289. And that's going to give me 27.7%. Because that's what I'm really saying is from 2017 to 2018, my cash increased. And I realize we're talking about in millions, but it doesn't matter, okay, as long as we're using all in millions. So my cash increased by 5,624. Okay, or 5,624,000,000. And so the amount of the increase divided by what the amount was the previous year is going to give me the percent change. So same thing then for 2016 to 2017. Close this, it's in the way. I can see that my cash and cash equivalents in 2016 were 20,484. And in 2017, there were 20,289. So again, I'll subtract. I'll just take the higher one, 20,484, minus the lower one, 20,289. That gives me my difference. And then I will divide that by this previous year, or the oldest year that I'm looking at. And I'll see there's my difference, which is, and actually it was a decrease. So it's going to be a negative, well, like negative 1%. So that's the process to find the difference or the percent change between the 2 years. All right, compute the days sales uncollected as of September 29th. Assume there are 365 days in a year. So I'm gonna actually scroll down. I think it'll be helpful. You can see this is where like the instructor one's not fair, right? Because I have like the whole answer key, it explains it all down there. But I think it'll help me walk you through it just so you can see it as I'm explaining it, okay? So we're looking at number 4 right now. And it says, oh, again, the day sales uncollected. So what we're gonna do is we're gonna take our accounts receivable, divide it by our net sales, and multiply by 365. So these items, accounts receivable, that's going to show up on my balance sheet. Okay, that's an asset, money owed to me by customers. And net sales is going to show up on my income statement. So I'm going to have to do some looking around. Let's see. There's my balance sheet. So I can find accounts receivable right there, 23,186. And then I'm going to divide that by, if I go up to my, where's my, sometimes they'll call an income statement a statement of operations. Okay, it's a part of the income statement, the operating income part. So don't get too worried about it. But here, right here, I can find my net sales. So 265,595. So I'm going to take 23,186, divide it by 265,595. Multiply that by the number of days in a year, 365, and that's going to give me my days sales uncollected, 31.9. I can repeat the process for 2017. Again, accounts receivable, I'll find up here on the balance sheet. Right there, 17,874. I'll divide that by net sales, which is right here, 229,234. Multiply that by 365. And I'll get 28.5 days. So what that means is, and maybe sometimes it's helpful to think about what it means, is accounts receivable is the amount owed to me, okay? And so when I divide that by sales, it's like saying, what is the amount owed to me as a percentage of my sales, okay? And then by multiplying that by the number of days in a year, I'm saying, how many days worth of sales am I behind on collecting? And so the bigger the number, the worse it is, okay? So like in this case, they're actually not improving. Last year in 2017, it took them 28.5 days they were running behind on collections. And now in 2018, it's 31.9 days. Is that close? Yeah. And if it was just stayed in that ballpark, fine. It's, in fact, if you have a policy of allowing your customers 30 days to pay you, then these are both really right in the ballpark. It means your customers are paying right on time. But I'd be watching this to make sure there wasn't a trend, right? If next year it goes to 33 days, then I'm starting to realize I have this trend where it's taking people longer and longer to pay me. And that's no bueno. All right. The last one, does Apple's collection of receivables show favorable or unfavorable changes? And so, like I just said, that is unfavorable because we're collecting less and less, and or not less and less, but it's taking us longer and longer to collect. So I hope that was helpful. And Marona had to sign off, so we don't know if it was helpful to her or not, but hopefully it will be. And hopefully it was helpful to you. I've got a few more minutes before I have to get ready for my other class. Another question we could field, or are we good?
On question 3 of that same assignment, do you just do the same thing that you were just showing us with the percentages and stuff?
So yeah, so this
no,
that's
not requirement 3, on question number 3.
Oh, let's see. Let's see. Oh, on the same assignment.
I think this is
Okay.
question 1. Yeah.
Gotcha.
Yep.
I'm a little slow sometimes, and I apologize. So yes, so let's see. This one is going to be compute cash and cash equivalents, compute percentage change, compute days sales uncollected, except now they're just giving you the numbers here instead of you have to look them up in the appendix. And they're doing them in won, which is South Korean money. It's funny how like you change the little symbol in front and people are like, whoa, this is different. No, it's still just numbers. But anyway, so yes, you want me to walk through it real quick, or do you feel like?
That's okay. If it's the same concept, that's fine. That's just where I got stuck earlier. I just haven't gone back and looked. So.
Okay, yeah, it's exactly, they're asking for the exact same things.
Okay. Thank you.
Brother Fox, I have a quick question.
Sure.
So I've already done the financial statement analysis, but I was gonna go back in because I had mixed up current year, prior year for the ratios. But I was gonna go back in and just look at my work so I could double check it and understand it better. But it is wanting me to use the second attempt to go back in and look at my stuff. Is there a way around that so I could go see my scores and the answers again, now that it's already been closed?
Let's see. So by already closed, you mean?
So like I already did the assignment once and submitted it.
And don't
got a
want to do it
score,
again.
And I don't want to do it again. I got like
Okay.
a 28 out of 30, 29 out of 30 or something like that. So I'm totally fine with that
Right.
number.
I
I just want to see it and like study it before I take the exam this week.
Right. So the short answer is, I believe, but again, because I'm always seeing it as an instructor and not as students, that there is a way to kind of be like in like view mode instead of like in work on it mode, review mode. But how you do that, I can't see it in that view. Anybody have any knowledge of what I'm talking about that would be helpful to the group? So maybe I'm wrong. Maybe they don't have that.
What was the question?
The question is there a way to go in and like review an assignment without having to do another attempt? In other words, if a student's happy with their current grade and just wants to review it, but not have it start another attempt, I thought there was a way to tell like review mode, because sometimes I'll have students do something in review mode and then go like, why is my grade not changing? So somehow they got into review mode.
There is a way. When you're in your when you're looking at all your assignments and it will say that you've attempted it, click on that and it'll take you to all your scores, and then you'll click on the scores and that will open up that test or that quiz or that book or the video, and it'll give you those points. And it will let you look at it.
Is it Tasia or Tasha? I don't know.
Tasha.
Okay, Tasha. Did that help? Is there? Are you trying it right now to see if you can make
Yes,
it work?
I'm
Okay.
looking at it right now to see if it'll work.
Okay. We're not doubting, Morona, that it will work. We're saying we don't know that we'll click the right things to make it work. We have complete and total trust in you.
Okay, so I think if you go to see reports, is that what you're talking about? Where you see all of your grades?
Let me see if I can get into mine.
I think
want me to let me-
think I found it. Hold on, let me I can click on this. I think, find the right week. Okay, I found it. It's kind of a weird way to have to get about doing it. But you can view your attempt without having to go back in. Okay, thank you. That's all I needed.
Okay, and then I see in the chat, Monica saying, can you do a video on questions 7 and 9 in the quiz access? And my answer is yes, I can do that. So I'm gonna write that down, and hopefully I have a class tonight. I will see what time I'll see how late it is when we get done with that class, and I'll see if I can put that together tonight. So this is the chapter 6 quiz access.
No, it's chapter 3, Brother Fox. Hi, how you doing?
Okay, how are you? I think I had.
You
so
you only had a video for number 8, for question number 8. And
okay.
so that's the chapter that I struggled a little bit. And I think that number 7 and number 9, if you were to record a video, it would be very helpful. Not just for refresh, but it would also kind of reinforce the concept on how
I believe
to
we
do it.
covered. I believe we covered question 9 in this meeting last week. I mean, it was a quick
Yeah, we
run
did.
through, but that might be another like a resource you could. It was a quick run through, but the nice thing with videos is you can watch a part of it over and over if you want. Maybe I'll also try to like trim that out of there and post that as a separate, just as question 9. So you're
And
talking about chapter 3, question 7, then in
Yeah.
addition to that.
Yes, I mean, the part that I would like, so on question 9, you said you did a video, and do you do it like, do you do steps 1, 2, and 3 in details, or it was just like very quick and very, you explained it very briefly?
Okay. Yeah, I'll take a look at that and see if I can get that posted.
Okay, and I really don't plan to take the exam until Friday, so you do have some time to work on the video.
Okay.
Copying and pasting. And thank you.
No problem. All right. Maybe I have time for one more. If anybody has another question.
It's just gonna. Paul did a video on the tutoring resources on that question number 9. If you go there, there's already a video.
Who did a video? The textbook publisher or whatever you mean, or?
If you go to tutoring resources, Sister Call, I guess she's
Okay.
another instructor. She
Yep,
also
yeah.
posted a video for problem 9.
Yeah, she
Or
puts
chapter
a lot of videos there. And so let me just real quick show people, maybe not everybody's aware of it, but the tutoring resources. Oh, let me get to Accounting 201. If you're in the class here and you just click on tutoring resources, there's all kinds of people like my only problem with it is like there's a lot coming across, so sometimes it's hard to like filter through all of it. But you'll have people asking questions, and Sister Call, she's another one of the instructors here, another online instructor like me. She'll, like right here is quiz access chapter 3.9. In case you still need help, please see this video. So she posts her videos here. And then also, if you're ever looking for, like, you can find my link to all of my videos in our course, but also if you, I post a link, the link is posted in here too. Just because, like I said, we're trying to make all this stuff we're doing available to all the students in all the sections. The only problem is it might be information overload, but anyway.
Brother Fox, I have
Yeah.
one more question. Am I the only one who thinks that these chapters are a little harder than the first exam? Am I the only one who see this chapter 3 and 6 being one of the most challenging ones?
I don't know. I can't speak for how everyone else feels. We could ask the group. Typically in past classes, that first exam, like debits, credits, adjusting entries, those sorts of ideas. Actually, 3 does the adjusting. So these are the hard ones for a lot of people. But I don't know. What do you guys think? Harder, easier?
I don't know if it was harder for me. I think the concepts are okay for me, but I think the way that it was done in the smart book, like I kept getting them wrong. And I think there were just small little differences in all the wordings that kept throwing me off. So that's where I struggled. I think it finally just gave up on me and kicked me out and gave me credit. So it worked.
Sarah, I felt the same way. I think the concepts I understand, and I did fine on the assignments somewhat, but the wording is so weird that it's really hard to understand what they're really wanting you to do. But
yeah,
I mean, understanding the actual accounting part of the adjustments and credits is, I think, fairly simple. I think it's just the questions.
Yeah, but knowing, are they giving me the amount to adjust, or do I have to somehow calculate the amount I'm adjusting off of this information? And I will say that this chapter, so I teach a lot of students from Mexico here at Eastern Arizona College, and these chapters for some reason are really hard for people who are non-native speakers of English, because I think it is so language specific. Like you have to sort of tell from tiny little cues in the language what you're supposed to be doing, that it makes it particularly hard. My Chinese is okay, but I would hate to have to try to take Chinese, like accounting in Chinese, and learn all of this specific and really. So I will say that, Monica, I've seen that too. Like it's hard it is hard. The adjustments especially are hard because you're not sure what it expects of you. So you're not alone, but I don't know if that helps.
Thank you, guys.
All right, well, I'm about out of time. So again, thanks everybody for coming, and we're gonna plan on doing this every Tuesday. Starting next week, like I said, it will move to 5 p.m. because my time doesn't change and daylight savings is changing. And so I'm really sorry if that screws people up. I know 5's hard for people who work a regular 9 to 5 type job. Anyway, can I get someone to offer a closing prayer before we head out? And Sarah said the opening, so she's exempt.
I can do it, Brother
Okay,
Fox.
thank you.
Our kind and gracious Heavenly Father, we're thankful for the opportunity that we had to meet as a class this evening with Brother Fox. We're grateful for his time and his willingness to help us understand the concepts that we need, for his ability to meet each week and to guide us as we're trying to learn new topics and information. We ask you to please bless each of us in the class as we prepare for our exam this week, that we'll be able to keep our minds open and be able to retain the information that we need, that we'll feel comfortable and prepared and ready for the exam this week. We ask you to please watch over each of us in the class as we depart this evening, that we'll be able to stay safe and to enjoy our families and the activities that we'll be going to. And we say these things in the name of Jesus Christ, amen.
Amen. Thank you very much. Have a great night.
Thank you.
Thank you.